Yeah.
Hello, Ron. So nice to meet
Hi.
you. Thanks so much for taking the time to join us. An exciting day with Mario Draghi today.
Sure.
Dollar's firming up and a very interesting environment. I've read your bio. I just want to introduce you to the community that you come from the Austrian School of Economics. That's your background in trading markets. You made a great call when gold was 500, talking about it going to over 2,000, 2,300. Maybe we're still going to get there. I'll be interested in speaking to you about that. And where I'd like to start is with your book, Austrian Investing Between Inflation and Deflation, because in my head, Ron, I'm torn between the two forces, the two powers. Which one's going to dominate? Maybe we're going to have both. First we have a deflationary scenario, and then the Fed really panics again, and they do have to go back to unconventional means to try and support the market if the equity complex ever sells off, because they seem much more market dependent to me than data dependent. So why don't we start there? What is it possible that the rule of alternation, for example, in the 30s here in the U.S., Ron, we had a deflationary depression. You were okay sitting on cash, while in Germany they had hyperinflation. They had the exact opposite, where their paper became worthless. And to me, it seems like there's more deflation in Germany this time around, where it might be the opposite scenario for them in the 30s, and with people questioning the way we keep our books in the U.S., the dollar may not be king, and you could be right about metals being the place to be.
Well, there's plenty of topics to discuss regarding that, and in fact, we wrote a book with more than 400 pages about that. But I think you're totally right. There's enormous deflationary pressure these days. So our financial system actually wants to deflate. The thing is that in our fractional reserve system, we need constant growth of credit. Since 2008, we cannot achieve this credit growth anymore, and that's the reason why central banks are so desperate, implementing quantitative easing, lowering rates, just making big monetary experiments. So if there would be a laissez-faire approach, like the Austrian School of Economics recommends, we would see massive deflation, we would see high unemployment, we would see a recession, of course, we would see bank failures, but that would probably be the basis for a new upturn. So central banks desperately want to avoid this natural deflation, and the thing is, central banks think that they've got everything under control. I don't think so. You cannot control the economy and the financial system like a thermostat. Just reducing rates, some QE, and then you will have X percent inflation and Y percent GDP growth. It just
So
doesn't
both,
happen this way.
okay, so both deflation and inflation are forces
Yeah,
that
yeah.
central banks and central planners can try to ameliorate. And let me ask you this: if we had just gone through the reset in 2008, 2009, we probably would have been through the worst of it and coming out of it, instead of where we are now with all this central planning and reflating of assets without the economic growth. We probably would have been repairing by now. And now you're
Totally.
saying
Yeah.
because of the delay, we're still going to have to go through what every central bank has tried to avoid for 8 years.
Exactly, exactly. I think the next crisis will be much bigger than the 2008 crisis. It won't be Lehman Brothers. It will actually be a country that will go bust in the next crisis. So I think we already have seen a massive disinflationary earthquake in the second half of 2014, but also 2015. We have seen a massive bull market in the US dollar, which also acts deflationary. But since the beginning of the year, and I think this is really, really interesting because we send it out in our letter to investors, and we mentioned it with our proprietary inflation signal. I think this will be the year of a comeback in inflation. Just having a look at charts confirms that. Have a look at the gold chart, for example. Gold always bottoms much earlier than the commodity complex, especially than silver. Now we're seeing that the gold-silver ratio is turning down now, so silver is outperforming gold.
Yeah, well, let me ask you about that.
Sure.
I've been around a while,
yeah,
and I remember the gold-silver ratio trading 40 or lower, and we recently peaked at 80. Do you think that we're going to revert back to the mean? Do you have targets on the gold-silver ratio?
I don't have explicit targets for the gold-silver ratio, but at 80 there's a massive resistance, and every time you went long silver versus gold at the gold-silver ratio of 80, it was a good choice. So I think silver will outperform gold, and that means we did a tremendous amount of research on the gold-silver ratio. This means that higher inflation rates are ahead, because silver usually outperforms gold when inflation numbers are picking up. And actually, this is exactly what central bankers and politicians want. They openly say they want to create higher inflation rates. The thing is that, inflation is not a singular event, it's a process. And I think this process is going on for many years now. And now we will finally perhaps see the outbreak of inflation. And the thing is that you just cannot control inflation dynamics. So therefore, I think it's going to be a very, very good year for the commodity complex. I'm pretty bearish on the US dollar. We're long Canadian dollars and Australian dollars versus the US dollar. I think the ruble looks pretty interesting. So I think it's for a macro oriented investor, I think it's going to be a great year.
So would you say that this would be a cyclical turn in inflation and inflation hedges within a secular deflationary trend, that it's just an interruption again, and that eventually we'll revert back to it? Like, for example, gold possibly rallies to new highs. Maybe it only rallies to 1,500 and we start heading down again. So, and the dollar is a linchpin. So, are you in the camp that the euro has bottomed at 104, 105, and we won't see it under parity during this cycle?
Yeah, I actually made quite a lot of bets with friends and colleagues that euro won't see parity, because it was such a consensus view. Now I don't see too much bullishness on the euro still. So, the thing in currency was everybody loses. So at the moment, it seems that the dollar will tend weaker, while the euro has weakened the last 2 years, and before it was the Japanese yen. And at the end, against what are they depreciating? Against hard assets, for example, gold. I think that the whole narrative of central bank diversion was a big fake. Everybody believed that the US economy is doing so well and much better than the rest of the world, and this will be the reason why the Fed will hike rates 4 times this year. I don't think they're gonna hike again this year. Actually, I cannot rule out a recession in 2016, which is, from my point of view, something really normal and something healthy. But we all know what central bankers and politicians do. As soon as recession arises, they start printing. So
that brings me to another asset class, and the asset class that people have been trying to top pick for the last 4 years, and that's treasuries. And as of late, Treasury yields have been dropping with gold going up at the same time.
Yeah.
But I'm getting some negative signals in TLT where we're putting in a failing rally. And I've always believed that the Fed is not in control of long-term rates. Is it possible that the bond market yields start to increase regardless of the Fed doing nothing, not only because of pressure from commodity prices, but also the pressure of having supply, just supply issues of having to keep rolling over that, and isn't that kind of a toxic brew to have a rising yield environment with a stagnant economy?
Sure, absolutely, absolutely. I think the absolute worst case for every, I would say, mainstream investor, and especially for institutional investors, would be stagflation. Now, stagflation is impossible according to Keynesian or monetarist economists, but it actually happened in the U.S. in the 70s.
I lived through it. Gas lines, everything, price controls.
Exactly, it's a tough environment. It's a tough environment.
Okay, so that was the end of Bretton Woods in the 70s, and we came off all the metal pegs back then. So this is a similar cycle. Do you think that the stock market, which really hasn't had anything more than a 10% correction for quite some time, I've talked to people who said they've never seen a secular bear market in equities while you have a bull market going in commodities. Is that your view, or could they separate?
Yeah, I'm not extremely bullish when it comes to equities, and we only have to follow earnings and also also sales numbers for the S&P. It doesn't look very well. Of course, the stock market is being held up by buybacks, but I don't think from an entrepreneurial perspective that's not a very good sign. So I think there might be some sort of a bigger correction going forward, but at the moment it seems that for stocks, sentiment is still pretty much neutral. I don't see any signs that equities will peak in the next few weeks. On the other hand, I would say that the risk-reward profile for the S&P isn't really good. So I'm continue to believe that we will see lower highs. And yeah, that's. But we also know as soon as the S&P is down, I don't know, 50, perhaps 20%, there will be another round of quantitative easing or something else, of course.
Okay, so that'll be the catalyst, is maybe like 1,600 S&Ps. You think that would? I mean, we only went to 1,800 and the Fed backed off pretty good. So
exactly,
maybe 1,550 might be enough for them not to say that they're not going to tighten, but that they're considering. Even Janet Yellen said that they could do QE again.
I mean, one of our biggest calls actually is negative rates in the U.S. and if really recession risks will increase and if the stock market is doing poorly, I think also the U.S. will implement negative rates sooner or later. We're actually seeing it in the Eurozone, we're seeing it in Japan, in Sweden, in Switzerland, and Denmark. And there's so much propaganda going on these days saying that negative rates are something normal and actually something good, which is crazy if you understand interest. But I think if the shit hits the fan, they will really implement negative rates in the U.S.
That's when gold really flies, because
exactly.
for years people have been talking about the opportunity cost of holding gold because there was no yield on it. But as we move to a zero interest rate negative yield environment, there is no opportunity cost in holding gold. It becomes a high yielding asset.
Exactly, and I mean,
because you're not paying to hold it.
It's crazy, and I mean, I'm talking to institutional clients, private banking entities, and so on, quite a lot, and everybody missed the rally in the first quarter. They all want to buy gold again. They want to buy mining stocks, but everybody is waiting for the big correction. And gold is trading like in a bull market these days, and there's so much money on the sidelines these days. It really makes me confident that we might go out of the year with gold trading at, I don't know, 1400, perhaps even 1500, and then I think gold will, sentiment will improve significantly, because gold and mining stocks have probably been the most contrarian asset the last 2 or 3 years. So I think it's gonna be fun for
everyone wants a break to buy, including me, and the market will not accommodate us.
Yeah.
Okay. So do you have price targets? Are you still sticking to your 2300 call that you made many years ago?
Yeah, I made that call in 2006, and in 2011, everybody said that's too conservative. I should raise my target up to, I don't know, 4,000, 5,000. Back in 2011, every major U.S. investment bank was extremely bullish gold. Now they're all still bearish. So let's go for the 2,300, and then we'll see.
Okay, so everyone was bullish up there at 1,900. Did you see the potential for 1,100, 1,050 when you were when it was up there, or did that surprise you?
Honestly, I was surprised by the strength of this downtrend. I thought, okay, it's overbought and everything, but I didn't think that it will come down that hard. I learned my lesson, obviously, but I think I'm always comparing this correction to the mid-cycle correction in 1970s, when gold came down from $200 down to $100.
I remember that. That's when they made it. Made it legal for U.S. citizens to own gold again at 200.
Exactly.
And then it got cut in half after it was okay to buy.
Yeah.
Okay. Yeah, I remember that. In fact, my first trade was a short side of gold on the floor as a runner at the CME. They say it's bad luck for your first trade to be a winner. So why don't you tell me what you do at incrementum.li, which I believe probably stands for Liechtenstein. Is that correct?
Liechtenstein, yeah.
Liechtenstein.
Liechtenstein is basically in the middle of Europe, very safe jurisdiction. We set up. I used to work for a bank, quitted my job because writing and talking about the Austrian School of Economics, and especially about gold, makes you feel a bit strange when you're sitting inside a bank. So we set up our own company in Liechtenstein, and we're running 6 investment funds now. We're publishing the annual In Gold We Trust report. It's a very extensive research report about gold, about inflation, deflation, about mining stocks, about the whole system. So the last one was 140 pages, and it's
wow.
really read all over the world. And the next one will come out in June 2016. So I already started writing again. Yeah, and that's basically what we're doing. So we're managing clients' money based on our systemic view that is heavily influenced by the Austrian School of Economics. Because from my point of view, we're not in a cyclical crisis. We're in a systemic crisis. We're in a crisis of our financial system, of our monetary system. So you really have to understand how this system works, how fiat money works, and therefore we really try also to educate our investors and our clients regarding those topics.
Okay, so if you're really in the systemic camp, then you probably believe that there aren't many safe banks, that there's potential for bail-ins, the legislation, that the Cyprus model will be repeated, possibly in some of the more developed countries. Is that a possibility you see down the road?
Of course. I mean, financial repression, we're seeing it all over the globe, and this is a very, very important topic, unfortunately, for investors these days. Really anticipating what might come next. And I think choosing the right bank is essential for every investor these days. And that's also the reason why we're in Liechtenstein. It's probably got the safest banking system in Europe.
Do they let U.S. citizens, everyone, if you're from the U.S. now, no bank wants to touch you? Is it the same there in your country?
Unfortunately, yes. Sorry about that.
Okay, so can I get a second citizenship in Liechtenstein and work for you? And let me ask you this: you may feel safe financially there. Do you feel safe when things unwind about being in that country when there's going to be social unrest in almost every country if what you're saying manifests?
I think within Europe, it's probably the safest jurisdiction that you can choose. In Liechtenstein, for example, nobody's really locking its doors because there's no criminality happening. Of course, that can change, but compared to other big cities in Europe, to London, to Paris, whatever, that's a huge difference. Liechtenstein has got only 35,000 people, so it's tiny.
Wow. Yeah. Well, okay, maybe a vacation sometime. I'd like to check it out because there aren't many safe jurisdictions. Are there any that you advise people or talk about that people could feel safe about depositing their funds outside their country?
That's a tough one. I mean, I don't want to recommend anything. As I've said, we chose Liechtenstein because it's a safe jurisdiction. It doesn't have any debt. It's got very solid banks with Tier 1 ratios at I think 30 or 35%. So very high equity. And besides that, you know, everybody has to do his due diligence. And I think there are people. Advisors knowing much more about those topics than me, but for us, I think Liechtenstein was the right decision.
Okay, when it comes to gold and mining shares, that's still paper. Do you think that people should have physical possession of the metals and put it in a coffee can and bury it in the backyard?
I mean, the beauty and I think the main advantage regarding gold is that there's no counterparty risk. So if you buy a gold certificate, whatever, you're giving up this huge advantage. So I always stress that if you want to hold gold as a as an insurance, you want to hold it physically, and it's got to be really close to you. If you want to make performance, then you can buy mining stocks, then you can buy options, futures, whatever. But you really have to differentiate what's the motivation, why you're buying gold.
Let me ask you this, and it's related to gold. Where are you on the war on cash that's happening globally? And do you think that we're headed towards digital cryptocurrencies, which would give governments complete control and know everything that everyone does by eliminating cash? And do you think they're going to be successful in eliminating cash? Like I believe wasn't Sweden the first country to invent currency, and they're now a cashless society?
Yeah. I think there's a strong trend. We already wrote about that in our last gold report. There's so many small initiatives happening. They're abandoning the 500 euro notes and so on. But there's enormous pressure coming from the public, especially in Germany. As you've said at the beginning, they know how hyperinflation feels. It's in their, let's say, the monetary DNA of Germans, but also in Austria we had hyperinflation. So people are really sensitive when it comes to those topics, and there's a huge movement at the moment. People are really fed up with politics, especially with Angela Merkel, and the other parties. They know that if they are in favor of cash, this will bring votes. So I don't think it's going to happen this year or next year, but sooner or later it will happen. And the main reason is, of course, then you can implement high negative rates. Then, of course, no bank run can happen anymore because every bank is basically insolvent if there is higher demand for cash for deposits. If you've got a ban on cash, then bank runs cannot happen anymore. So I think this is also a part of financial repression. But I don't think that cash will be banned in 2 years. But it will be harder and harder to get cash.
Okay, I'd like to wrap it with the political silly season in the U.S. here. Ronnie, what's it look like from where you're sitting, and what are people saying about America and the presidential potential candidates, Donald Trump, if they don't take it away from him in a contested convention, and Hillary Clinton looking to be the most likely Democratic nominee? What's Europe pulling for? Status quo? I know that they took up a vote in the UK not to allow Donald Trump into the country. So, wondering, is there fear in Europe if Donald Trump gets elected to be U.S. president?
I wouldn't be scared. I mean, what somebody just said, that Americans are voting not with their heads; they're voting with their middle fingers. And I think the high popularity of Donald Trump is because people are not happy about the economic situation. They are not happy about how the U.S. and the whole world is developing. And I totally understand them. Just to let you know, in Austria, we also got president elections, although here the chancellor is much more important. The president is mostly representing the country. But here we're also seeing that the two strongest parties, their candidates will lose big time in those elections, and probably the candidate of the Green Party will win this election. So I think it's definitely a global trend that we're going further to the right and further to the left. There's nothing really left in the middle of the political scope.
Like the 30s, yeah, right, Ronnie?
Definitely, and that's definitely something really scary if you know history. I try to leave out reading too much newspapers and daily stuff. I try to focus on reading about history. And of course, everything is interconnected: financial markets, the economy, political cycles, wars, and so on. So that makes me a bit cautious having a look at the world these days with so many crises that we're seeing. I think that's it's going to be.
Don't you wish you didn't know?
Huh?
Does it affect you and your life? And hard to have a real positive view of the future when you have this knowledge or believe what could be a truth that is going to manifest in the world and what you see ahead. How do you maintain a good attitude when you're not optimistic about the future?
You have to take it as it is, and you have to prepare. I'm having two small kids, there's plenty of reason to be optimistic, and I think people raised families during the wars and so on. It will go on. Of course, everything looks a bit dire, but I still believe in, I don't know, humanity. And I think that, from a cyclical perspective, it will get worse, but then it will hopefully get better and much better. And of course, a main reason for the problems that we're having are based on our monetary system and fiat money creation. So I think that having this view that the Austrian School of Economics provides. The Austrian school was developed during times when hyperinflation, monetary reforms, wars, and so on were pretty common. So they don't care if GDP will be 1.5 or 1.3%. They really want to understand the big picture. And this is also what I'm trying to do in my research. So if you get the big picture right, I think that's really crucial for investors these days. And I think that inflation will become a major topic again. In fact, no fiat money system ever broke down because of deflation. It has always been inflation. So yeah,
Interesting.
that's
Pearl.
that's
Okay,
that's
well,
that's
you know what, Ronnie, I want to thank you. It's a
thank you.
fascinating discussion we had today. And why don't we wrap it with hope? And I say this: hope is the oxygen in our life and the carbon monoxide in our investing.
It's a good one.
So
Thank you very much.
Really a pleasure meeting you, Ronnie. Thanks so much. The best
Pleasure
way
then.
for people to possibly subscribe to you or get involved with you is to go to your website, www.incrementum.li,
Exactly.
or follow you on Twitter. Is that correct?
Exactly. Yeah. Thank
All
you very
right.
much, Dale. Have
All
a
right.
good day.
Well, hope to see you when we come out of the other side. Okay, Ronnie?
Absolutely. Okay. Take care.
2021. All right.
All right.
Thank you,
Bye bye.
Ronnie.
Take
Bye.
care.